Okay, great. It's recording. Thank you. Good morning, everyone. I'm so delighted to have you all join us at our Ghana Venture Capital and Private Equity webinar series. My name is Hannah Akwa. I'm the CEO of the Ghana Venture Capital and Private Equity Association. And we are delighted to have with us here today, Rosalind, representing the Security and Exchange Commission. We all know her very well because we work very closely with her in the private equities, private funds department, or private, let me say private equity and venture capital. So basically anything to do with investment. And without further ado, I would love her to maybe introduce herself and maybe any of her colleagues who are on the platform that she would like to introduce, and we'll continue with the session. Please note the session's about 1 hour. We have about 30 minutes for Q&A. Sorry, 30 minutes for presentation, and then the remaining 30 minutes for Q&A. We will kindly ask that you can type your questions in the chat box, or you can just raise your hand at the Q&A session, and then we will unmute you to ask your question. But if you're not speaking, please feel free to mute. And I'm going to pass it over to Rosalind right now. Rosalind, thank you very much, and enjoy the presentation. Thank you. Okay, so Rosalind, you can unmute yourself. Let me see if Rosalind's having. There you go.
Thank you, Hannah. Rosalind Dakwa is my name. Yes, I work with the funds management. I happen to be the head of the funds management team at the Securities and Exchange Commission. It's a pleasure to be here with you. I think I'm not new to this fraternity. We've engaged on several occasions, and today is one of the many that would even be seeing in the future. I'm here with two of my colleagues. I'm asking them to introduce themselves as well. I have Anthony Debato.
Okay, hi. My name is Anthony Debato, your price management department as well.
And then we have Miss Simpson.
Hello, my name is Nam. I'm also with the
Yeah, so that's just by way of introduction. I don't know whether you want us to go on.
Yes, please. The floor is yours.
Okay, okay.
The floor is yours.
All right, thank you. So thank you and good morning, officers and members of the GVCA, distinguished stakeholders of the private equity venture capital space, participants, all protocols observed. I'm here on behalf of the Director General of the SEC, the executive and the management team of the Commission. Basically, we'd like to just thank you for this opportunity to engage with your good selves on areas of common interest which relate to the PEVC industry. Indeed, the SEC has on a number of occasions interacted with representatives of the GVCA and also the larger group of stakeholders regarding areas of concern within the SEC's regulatory framework. We've also seen some reports and views expressed by independent stakeholders within the space. Within the context of fulfilling the SEC's mandate, SEC is very open to reviewing and retooling its regulatory apparatus. And the Commission has communicated that clearly to the association and to the stakeholders. We are currently awaiting a formal proposal from the association to be tabled before the Commission for consideration regarding the current framework. SEC is at the point of a regulatory overhaul, and I believe this engagement today, we will garner some inputs from your end and enable the SEC move forward in its overhaul agenda. And so with that, we'll go into the presentation. One minute. Just a minute.
Okay, no problem. I'll just use this opportunity to remind all the newcomers that we'll be talking for about 30 minutes via the presentation, and then we'll have a Q&A session for about 30 minutes as well. So please, if you have a question, feel free to write it on the chat or raise your hand at the time and we'll unmute you. Thank you again for joining. Okay, you're muted, just to let you know, Rosalind. I'm not sure if you are speaking yet, but just to let you know, you're muted. So don't do this at 4 things so that I can see that.
Okay. So this is just introduction, our philosophy, and everywhere we go, we like to share it. To regulate, innovate, and promote the growth and the development of an efficient, fair, and transparent securities markets in which the investors and the integrity of the market are protected. And so in all we do, we are guided by this. We also want to be a top-tier securities market regulator in Africa. Our values are team spirit, respect, innovation, and commitment. There are currently in excess of 200 licensees. The majority within the FM space, the funds management space, 81 licensees, yes. With the private fund space, we have 9 licensees within, under the ambit of the SEC's regulation, yes. So our purpose is to provide an overview of what the regulatory framework for private funds and private equity, venture capital and hedge funds are. And so if you look at the definition of what private funds is within the SEC's act, main acts, when we talk about private funds, there are 3 assets classes within that. We have the private equity, we have the venture capital, and we have the hedge fund. So throughout the presentation, we might make reference to private funds, and it relates to these 3. And our guidelines are specifically for these 3 asset classes. Of course, this particular presentation relates only to private equity and venture capital. So there are some references which may not directly relate to the PEVC. However, because it's under the private fund space, the guidelines talk about it, just to put it within context. We see that this engagement is basically on the premise that there are a number of new and potential entrants into the PEVC space. And so seeing that we've gone through this route before, every now and then we are having to just engage and then just apprise the stakeholders or the members within the space of what our requirements are. And of course, to allow you to share your concerns in that regard and probably what we are doing at any point in time. We believe that the engagement is also important in view of the role of the asset class within the Ghanaian economy. And we know that the future landscape of the VCP sector is promising. Ghana is deemed as an important or a growing hub for private equity venture capital business within Africa, or a safe place for that. And so SEC is also very much interested in growing the space. From your benchmarking reports, we gather that it has grown by about 14.4% over the years annually, and it has reached about $7 billion. That was as at 2023. Indeed, it continues to grow, and currently we have licensed 9 of these PEVC funds. And so I gave the definition of the private funds, and I'm talking about any person carrying on the business of either a hedge fund, private equity fund, or a venture capital fund within the SEC acts or regulatory framework. When we talk about private equity fund, our definition is an investment company which pools money to invest in private companies for the purpose of generating or making returns on their growth. That is what the SEC regulations provides. When we talk about a hedge fund, is a fund which has a portfolio that uses investment strategies such as leveraging, short position, derivative positions, the purpose of enhancing returns or to protect the assets against market exposures. The definition of a venture capital fund is an investment company that pools money to provide funding to early stage, high potential growth companies for the purpose of generating or making returns on their growth. It is important that we understand the context within the SEC framework, what we mean by these asset classes. And so the topic today is about the relevant laws and regulations, or the regulatory framework. Our mother regulation, the Securities Industry Act 2016, Act 929, as amended by Act 1062, is the mother regulatory instrument that is used to govern the capital markets. Of course, for the purpose of this particular engagement, the private equity venture capital space, there are provisions within the Companies Act, the Income Tax Act, Venture Capital Trust Fund Act, the NPRA, Pensions Act, that we also draw on. The NPRA guidelines on the investment, Tiers 2 and 3, the new investment guidelines, we draw on those as well. The Bank of Ghana regulations, the GIPC Act, which is currently being reviewed. And then, of course, we look at within the SEC also, the Securities Industry Conduct of Business Guidelines, the licensing guidelines, the SEC's guidelines for private funds 2018, the SEC's AML and CFT guidelines, and then the Anti-Money Laundering Act of 2020. So in terms of the relevant laws and regulations that we fall on or we reference in relation to the regulation or monitoring of the private funds space, these are the instruments or the regulations that we fall on. We continually receive feedback, and SEC is always willing to review its existing processes and regulations. We are currently undertaking various benchmark initiatives to improve upon what we have. Just like to reiterate that we know that there are concerns on various platforms on the licensing processes director assessments, and other requirements of the SEC. We just want to say it again that the SEC is currently reviewing its existing regulatory framework. And we expect that at the end of this engagement, some more suggestions and inputs from key stakeholders gathered would be used in the regulatory overhaul process. And so we'll start with our fund application process. What do we require? And this is per the Private Fund Guidelines 2018, as I've already mentioned or indicated. So per the Private Fund Guidelines, it is required that for a fund application coming in, you must first have appointed a fund manager or an investment advisor. So we separate the fund manager license process from the fund application process or fund management licensing process, the fund licensing process. And so there are two. Sometimes we sort of put them together and then that's where the issues come in. But what we are saying here is that before your application comes in, you must have appointed a SEC licensed FM fund manager or an investment advisor who has private fund experience, or you submit an initial application for an IA license. Their guidelines talk about a fund manager. Currently, there is a freeze or there's a moratorium on fund management licensing. The SEC is interested in the growth of this space, and so is currently issuing investment advisors licenses for the management of private funds. And so the point I've made is that you must have a fund manager or an investment advisor already licensed before you put in your fund application for licensing. That's the first. The second has to do with that you must have 4 representatives, the fund manager or the investment advisor, and that includes the CEO of the fund manager or the IA and the compliance officer. As part of the fund application, you are also expected to appoint an independent custodian. It is, however, optional for private funds, private equity and venture capital, PVC. However, it's compulsory for hedge funds. And so the appointment of a custodian is optional for private equity and venture capital funds. You must have also appointed an independent auditor. So in this case, is independent of the fund's auditor. And then also you must appoint an auditor for the fund. So there must be an auditor for the FM or IA, and there must be an auditor for the fund, and they must be independent of each other. It's also very important that these auditors must be SEC registered. And so we have a pool of auditors who are registered to operate within the capital market space. And so you must check whether the auditor that is being engaged is a SEC registered auditor. And then the fund must be incorporated under Act 992, either as a local company or it must register an external company. Once you are incorporating under the Act, you must appoint a company secretary, and the Act 992 requires, you must have recognition by GBA or a similar professional body. And so that's what we require at the time of submitting your fund application before. Yeah. We'd also look at the licensing requirements. So we have talked about licensing of the fund manager or the investment advisor, it has its own requirements, and you must have gone through that process and obtained your fund management license or investment advisor license. This process must precede or must be finalized or completed before the application for the private fund or the PEVC is submitted. For the manager of the fund, we're talking about the submission of your initial application, and I've mentioned that it's either an investment advisor or fund management license. Currently, there's a moratorium on fund management license. You need to submit your incorporation documents. You need to submit a business plan. You need to submit audited statements of affairs if it's a new application, or 3 years audited financials if it's an existing company, tax clearance certificates, anti-money laundering, CFT compliance program, evidence of payments of license fees, SEC license fees, the information is available on the websites. The fund manager must be MCR compliant, that is, must have achieved the minimum capital requirements. And so for the fund manager, there's a 2 million stated capital requirement. So you must have it, and it must be maintained all throughout your existence as a fund manager to be in good standing. And then for an investment advisor, the stated capital of 1 million cedis. I know this is an area of concern to a number of our fund managers or potential fund managers or investment advisors within the space. Probably will address it as we go along. We also need to go through fit and proper reviews, and that's we do for directors of the fund manager, principal officers, and reps of the fund manager. We also require at least 3 directors, and we also require that there must be a good balance of executive, non-executive, and independent. We ask the directors to go through the directors' personal notes assessment, and you fill in that and you submit, and then it goes through the fit and proper review process. For shareholders of the fund manager or the investment advisor, we require that you submit proof of funds. The representatives we require 4, including the CEO and the compliance officer. And then what we say is that you must have certification. What the regulations or the guidelines say, provide is that you must have GC certification or any other course recognized by the SEC, or you must obtain a waiver by SEC, a waiver from the SEC, and that depends on whether you have alternative qualification or sufficient experience to be within the space. And so there are various options. I've heard it said severally that, well, what do we need? GC certification doesn't sort of provide the relevance that is required for the space. I agree with you, but then that is not the only requirement. In the absence of a GC certification, it talks about any other course that is recognized by SEC for this particular space or industry, asset class. And then we require, and that is basically for the initial licensing process for a fund manager or an investment advisor. Currently, there is an annual renewal of license. So the licensing period starts from June, 1st July, and closes by 30th June of the following year. And it must be renewed annually. That's what our guidelines provide for, or the Act provides for currently. However, a one-time license is being promoted by the new bill. And so it's very likely that this annual renewal may be a thing of the past sooner than later. The license processing period, yes, it's also a matter of concern. Our Act talks about a maximum of 90 days after the receipt of complete documentation. And so within 90 days of having submitted an application or complete application, the SEC must have gone through the process and then given you its decision regarding the application. We're talking about the fund manager or the investment advisor. What happens in a number of cases is it comes sometimes with an incomplete documents. We query some of the information that has been provided, or evidence is not provided. It goes and it comes with just one, and then there are some still outstanding, unwillingness to fully comply with it. And so there's a back and forth. Where we must start counting from is when the dates when complete documentation or information has been supplied to the commission, and that's when the 90 days kicks in. However, I would like to add that sometimes there are some other reasons which may unduly delay, and this may include the due diligence, the fit and proper assessment, or some due diligence that must be conducted, either on some of the reps, either on the manager, either on the director. It is based on your specific circumstances. And so once we look at it and we realize that some more due diligence work must be done or some information must be sought, it may sometimes prolong the licensing process. But fit and proper reviews are one of the things that the whole financial sector is currently prioritizing. That is after the cleanup or the issues that arose within the financial sector from 2017. That is the banking industry, and then after 2019, what happened within the capital market. So the fit and proper assessments are things that we deal with, and we don't take it lightly. So that is the manager of the fund, and that's the process that we take them through. Hopefully, once this is done and you have received your license, then together with the other documents or prerequisites, you can put in your private fund application. We also require your reps. You must have at least 4 reps. We have mentioned it. The reps must have the GC certification or any other course recognized by the SEC, or they can also seek a waiver. Depends on what alternative qualifications or what experience they have. We have indeed licensed fund managers or reps without GC certification, but with other qualifications, or sometimes even just experience based on their experience within the space. You just have to grant the license. Yes. We also expect that the licensed reps should keep up-to-date records with the commission. Any change in the licensed reps, the number of reps, information regarding the reps, information regarding directors, information regarding, we expect that up-to-date records must be kept. Any changes must be communicated to the commission. The commission sanctions the manager for non-compliance with this direction. We also require licensed custodians, and like I've indicated earlier, it is optional for the private equity or venture capital funds, but they go also through a licensing process. So it's either you appoint an existing custodian who has gone through it already, or if the custodian is yet to go through it, you must wait for the licensing process to be complete before we can go on to submit our private fund application. So then with the private fund application, and currently to register a private fund, you must incorporate it under the Companies Act. That's what we have. I know that the Limited Partnership Act is one of the things that is very dear to this industry, but I guess we'll get there. Currently, it must be incorporated as either a local company or an external company under the Companies Act. You submit the fund regulations. There must be at least 3 directors. The directors must complete the director's personal notes. Currently, we have it in electronic form. The fit and proper assessment of the directors of the fund, also very important. And then you submit your initial private placement memorandum, PPM, for approval. We must go through it and just know what you intend to do. We know that at the time of the application, it's an initial PPM and it's likely to go through changes. And so we don't demand your final PPM. We get the initial one. And then we require that once your final PPM is ready, are available, you must submit them to the SEC so that we have a record of the existing PPM that governs the fund. We also expect you to submit formation documents, and then after all that, we ask you to get certification by a lawyer that the fund complies with application requirements. So all the requirements that have been provided for under the guidelines and the acts and all other regulations, you must have a legal person give you that certification. We've talked about a separate manager license by the SEC. However, in the case of a self-managed fund, you don't require a manager, and the SEC licensing approval for self-managed fund is given at the discretion of the SEC. So far, we have licensed 2 self-managed funds, and it was on the basis of their specific circumstances, such as the sources of the funds. Yeah. We expect this investment management agreement to be submitted to the SEC between the fund manager and the fund. We need to see a copy of your valuation policy, and then the fund must have a minimum fund size of 10 million cedis. Yes, at this time, it's very obvious, or it's likely that you may not have raised the capital. Indeed, yes, but it's commitment or indications that we seek to ascertain at this point. And we also insist that throughout the life of the fund, that minimum fund size must be maintained. You submit application, and then you state whether it's a private equity fund, a venture capital fund, or a hedge fund that you seek to apply for, and it must be clear. You pay the required fees. It is non-refundable. And then we say that in the event that your license is not likely to be approved, you'll be granted a hearing before the decision, the final decision is made. And is the licensing processing period of 90 days that applies for each of these various licensee classes. That is about our licensing process and requirements in brief.
Great. We do have a few questions. Would you like us to ask some of those questions, or we complete the presentation?
I'd rather we complete the presentation.
Okay.
So that
Sounds good.
Thank you. So that's the initial licensing process. Your continuing obligations to the commission. Your continuing obligations to the commission, and so we require reporting requirements for the fund itself. And the commission requires half-year reports, the same reports that you send to your investor. They are called investor reports, and then full-year reports that you send to your investors. And it must, all we require is that it must include the statements of the manager and the statements by the custodian within that fund report. That is, if a custodian applies to this particular fund. For the manager, being a fund manager license or an investment advisor's license, the commission requires monthly reporting, quarterly reporting, the manager's placement reports to have an idea of what he's managing and the values, and then the end of year reports, which annual financial statements, and then a management letter inclusive. Yeah, monthly, quarterly, audited annual financial statements. Yes. We also require that change notices be communicated to the commission. And then from time to time, the SEC may conduct inspections on site. So what do we require of the directors of a private fund, a PF? All that we require is that the directors must satisfy fit and proper requirements. Fit and proper requirements. The financial status of solvency. And so in filling our ED, there are directors' personal notes. There's a portion that you complete which gives indication of your financial statement. You must provide information on your educational, other qualification or experience, looking at the nature of the functions that the person would perform. The fitness and proper also, the ability to carry on the activity competently, honestly, and fairnessly. So we look at reputation, we look at character, financial integrity, and then the reliability, whether if the person is an individual, the individual himself, if it's a fund, the company. So we look at the directors. So that's why we look at the directors, because in looking at the fitness and properness of the fund, it's the directors that we assess. We also like to consider whether the person or the director has contravened any law regarding the protection of investors due to honesty, incompetence, malpractice, whether he's been a director of a market operator that has been under liquidation, etc., whether he's taking part in any activity that has been deemed fraudulent or prejudicial or improper, whether he's been associated with any business practice that would cast doubt on his competence and soundness of judgment. So these are the things that go into the fit and proper assessment. We usually do that through the security agencies, the Financial Intelligence Center. They help us to do that because there are some of the information that we may not be able to do. So we engage them, and sometimes their processes take quite a while. But I think the financial sector policy now is every director coming into the space must go through that kind of assessment. The director must also be able to undertake all fiduciary responsibilities and other oversight duties under duties and liabilities under the Act. It's spelled out in the Act 992. So if you are coming in as a director, you must ensure that all fiduciary responsibilities and other oversight duties as a director. And so you can't tell us that, well, it was the manager that did it. Did you also, sometimes we'll stretch it to see whether as a director, your oversight responsibilities and your fiduciary responsibilities were carried out adequately. And the Companies Act makes those provisions. The directors may give directions to the manager. However, it says that you can't give directions which contravene the Companies Act or the SEC's Act, the SEC's guidelines, the regulations of the fund, or the management agreement. Directors must take reasonable care to ensure that they determine the investment and general policies. So it's at the policy level. Make sure that you outline the investments and general policies, and then you have approved them for the manager to carry them out. Make sure that the PVC is managed per the acts, the guidelines, and the regulations of the fund, and also the custodians where applicable. The manager and the custodian, where applicable, must perform their functions under the Act and guidelines, and it is the director's responsibility to ensure there is adequate systems and in place to ensure and oversee that. So for directors who don't satisfy these requirements, there are penalties that go with them. And so we also want to, yes, the guidelines also indicate that the fund, once it's a private fund under the SEC's supervision, you cannot deal in any entity, any investee company, by way of either lending, investing, providing finance to, acting as a guarantor to any of the directors or companies and affiliates in which the directors and their close relations hold a substantial interest. So it's talking about directors dealing with a private fund, and the guidelines make provision for that. So we can talk about the managers. What do we expect of the fund manager or the manager of the fund? We expect the manager to manage on a daily basis the fund, and that may include the selection of investments and actual investment management. He should act solely and take reasonable care in protecting the interests of clients. So he must manage the funds in accordance with the private fund guidelines, the formation documents, and then the most recent placement documents. That's the placement memorandum. The fund manager must then maintain the minimum capital requirements and comply with other financial requirements. And here we have the minimum capital requirements and the financial resources guidelines. Just like to state that our financial resources guidelines have not yet been made public. And so currently we're only dealing with the minimum capital requirements. But as soon as they become active, they are expected to comply with it. The managers are expected to be assessed in relation to their fitness and properness. And they must ensure that directors and key persons have the required qualifications, experience, and integrity required by SEC. So the managers at the time of putting out the directors and key persons, they must have in mind the fit and proper assessment requirements, because you are going to bring them to SEC, and SEC is going to go back and forth with them. And so they should do the first cut and ensure that whatever they bring before SEC would pass the assessments. Then the managers are also to ensure that they do their due diligence properly in accordance with professional standards and what the SEC guidelines require. They should establish a policy of conflict of interest, and that will be subject to the directions of the directors and in accordance with the SEC requirements and the Companies Act. And then they should maintain and cause to be maintained books and records of the fund and audited accounts in accordance with the guidelines. Record keeping. The managers are also to ensure that the assets of the fund are clearly identified and are held separately from the assets of the manager himself, and is separately held from the other funds or schemes that are under the manager's purview. Custody. If the fund has a custodian, the manager must ensure that the assets are held in the custody of a custodian for safekeeping. They must ensure that the fund valuation is carried out at regular intervals in accordance with the fund's regulations, the valuation policy approved, and then also the SEC's requirements. They must ensure that their own officers of the manager and officers of the self-managed fund are properly licensed, and then renewals are done annually. And so in doing that, what it means is that the requirements for licensing, they must ensure that they satisfy them on a periodic basis. The manager is also expected to report to the SEC any breaches of the Act or the guidelines that relate to the fund or that are likely to have an adverse effect on interests of investors as soon as the manager becomes aware. So sometimes, yes, we will play, we were not aware, or we didn't know, or yeah, but then it says that as soon as you become aware, you are expected to report it to the SEC. And then you notify the commission of any changes in your particulars in accordance with the Act. The manager is also liable to investors for unjustifiable failure to perform his obligations, and then improper performance of functions or obligations. He's liable to his investors, and the manager is responsible for actions or omissions of any other third party that he engaged or has been engaged to carry out any function on his behalf. So administrator, investment advisor, or any such third party who is performing the function on behalf of the manager, or who the manager has delegated some functions to. You are at liberty to do that, but you take responsibility for those actions. Now, avoidance of exclusion clause. It says that any provision shall be null and void. So if any provision has been made in either the formation documents or whatever documents of the private fund that seeks to indemnify the manager or the custodian from liability for any failure to exercise due care and diligence in discharging their functions regarding the private fund, it will be considered null and void. So you cannot indemnify yourself from liability for failure to exercise due care and diligence. So it's specific, exercising due care and diligence in the discharge of your functions. Okay. And so in terms of fund valuation, we look at the SEC just requires what methodology you valuation methodology, and that there must be a policy. It must be in line with the guidelines, and then standards, professional standards. And what we require is the disclosure that you need to make to investors. And that's what SEC seeks to know. We are not going to question the methodology, but we are going to ask you to make it, disclose it adequately, sufficient disclosure, and that's all that we require. And so the board may decide to replace the fund manager for one reason or the other, and it is within their right to do that. However, it says that you shall give written notice to the commission of any proposal to replace either the manager or the custodian. Okay, and it says that neither the manager nor the custodian shall be replaced except by persons who satisfy the requirements of these guidelines. So persons who are fit and proper to be custodians or managers. You can, yeah. Yeah, so revocation of license. If the fund no longer satisfies the initial license requirements or the continuous license obligations, if in the interest of investors and potential investors demand that the license be revoked, if there's a contravention by the manager or the custodian in terms of providing provision of false reporting or misleading information, the license may be revoked by the SEC. The license may also be revoked at the request of the board of directors of the fund. However, if SEC requires investigation into the affairs or the reasons being provided, the SEC would do so. Or if the SEC feels that the revocation is not in the interest of investors, they may not grant the request of the board of directors of the fund. Yeah. So provisions on winding up, that for a private fund, as a private company under the Companies Act, winding up would be in accordance with the provisions of the Companies Act 2019. There's no specific provision under SEC guidelines. It will just go under the Act 992. So we also take a look at what's NPRA being one of the potential limited partners usually in this kind of space. What their requirements are. Okay, so the NPRA's permissible investments make provision for alternative investments. And in their definition of alternative investments, we have the private equity funds in the private debt funds in there. And so for this conversation, we'll probably just pick out those two. So it means then that private equity, private debt are within the permissible investments of the NPRA. And then it says that it's a maximum of 25% of pension funds may be invested in alternative investments. However, if it's external, it should not exceed 5%. And so it allows up to 25% for each scheme or each pension fund in this whole spectrum of alternative investments for each scheme. The NPRA also further makes requirements that there should be an offering or placement memorandum, and that it should include investment objectives, investment strategy, sector focus, financial statements of the manager, an external auditor registered by SEC, and there must be full disclosure of all risk factors. It says the private equity must also satisfy predefined liquidity or exit mechanisms, and then it must be managed by a fund manager or investment advisor licensed by SEC. It goes on to talk about the key principles of the fund manager and the years of experience or the requirements. 5 years of experience in investment management, at least 2 should be in the PE investment space. When there's exit of key officials, you must notify the NPRA. The manager, it says the manager of the fund must retain 2% of the PE fund assets commitment. and other requirements prescribed by the NPRA. And so we also have, as part of our guidelines requirements, some supporting schedules to the PF guidelines. And so they are templates of the regulations of the private funds. So yours may include more than what we require, but at least these are some basic requirements that we wish to see within the schedule. We also have offer documents or your placement memorandum. What are we expected, what you are expected to put in there? They are attached as schedules. And then we have your financial statements, and then the investors' reports. What are the basic information that we require? So then they are actually there for the regulations. I don't know whether I should go through them. Let me show those slides. Yeah. Okay, so this just tells you what we require in the various schedules, but I'm saying that these are just basic information that is required for the schedules. If you, for the regulations of a private fund, for your private placement, these are basic. Usually your placement memorandum has the requirements are more extensive. However, the minimum, this is what SEC requires. The financial statements, Schedule 3, and then the investor reports, Schedule 4. This is what we require, or this is the minimum that we expect to see. And so that brings me to the end of my presentation. And thank you for your attention. And we'll pause here for your questions.
Thank you very much, Rosalind. That was very thorough. We really hope we could get your slides so we could also put it on the Gvca website.
We'll send them to you. We'll send them to you.
Could I please ask Anthony, the colleagues in your room, to mute, because I can hear myself echo. So if they can mute their computers, then they can listen from yours. We have a few questions. I wanted to quickly ask William, Senna, and Abdul Latif if you'd like to raise your hand, and then we can unmute you for you to ask your question. If not, I'm happy to read it out. So Abdul Latif, I see you. Would you like to ask your question, Senna? And then William had an earlier question. I'm not sure if they're still here, but
so Hannah,
yes,
is it okay if we take 2 or 3 questions and then we
Okay.
can answer them in a row?
Oh, okay, all together. Okay, so I see
Yes,
a
all
hand
together,
up. So then let me get. I'm going to start with Abdul Latif. If you could, I don't see William, but let me start with him to ask his questions, and then we have 3 there, and then I'll pause. So please, Abdul Latif, Joseph, and then Kojo. Abdul Latif, please feel free to unmute. I hope you're okay to unmute. Do you have any issues unmuting? Abdul Latif, please feel free to unmute. Jesse, please check. Okay, there you go.
Good morning, everyone. I'm Abdul Latif Shaibu with Intalco & Co. Thank you very much for the wonderful presentation. My question is with regards to the fund manager. Is there a limitation as to the number of funds that the fund manager is permitted to manage at a particular period?
Okay, thank you, Abdul Latif. We're going to take 3 questions so she can answer all 3. So stay used to keep on there, staying there. I'm going to ask Joseph to also unmute, ask his question, and then Rosalind will take 3 questions and respond to 3. Joseph, could you unmute?
Hi, Hannah. Thank you for the opportunity and thanks for the presentation as well. I have a question, and my question is in relation to the requirement she presented. And I wanted to know, for example, as a first-time fund manager, looking at the requests they made, especially for audited financial statement and other requirements for a first-time funder? Is there a waiver for some of these various key requirements they requested for? So that's my first question. Thank you.
Thank you very much. And please remain there. And I'm also going to ask Kojo, can you unmute? And thank you. Kojo?
Good morning, Hannah. This is Percival, Venture Capital Trust Fund.
Hey, Percival.
Rosalind, thank you very much for the presentation. Wonderful presentation, good insights. Hannah, to be honest, my questions are quite a lot. I have also general comments in respect of tech, and I imagine this is an engagement with tech that perhaps Rosalind was saying that they would be taking feedback from the industry. So I imagine it won't just be questioning, but also submissions that would be considered by SEC in respect of the regulation of the private equity venture capital space. So I really have a number of questions. So I don't know if I would ask one and then go and come back later. But let me start off with this one. Then maybe I can come back later with the other questions. You mentioned that for the certification that somebody must have in order for you to grant, it says a person must have a certification, I think the GCEP or something certification, and that SEC is willing to waive in certain circumstances when a person has taken recognized courses or courses recognized by SEC. Is there a place on the SEC website where the courses that are recognized by SEC are published so that we can all be advised, whether or not a person who has taken that course or a person who has this kind of experience can qualify? Because at the moment, one would never know whether he can get the waiver or not. So if there is a way SEC can actually publish what it is they look at as the alternative courses that would meet their requirement, that would be awesome. I would leave that question there for now and then come back when there's a second round of questions to ask the other questions that I have in respect of the investment guidelines. There are some questions regarding the fund management licenses, the self-managed funds, and the requirement to maintain amount of money, minimum capital in the fund throughout. It doesn't sit well with PE, so we'll talk about that when I come back next. Thank you.
Okay, thank you so much. So you can just sit there, and then Rosalind, is over to you to answer, and then I think Percival will continue afterwards.
So thank you very much. I think the first question was from Latif.
Yes.
We wanted to know the number of funds or whether there was any limit on the number of funds that a fund manager could manage. Am I right? So currently there's no such limit. There is no such limit all throughout our regulatory framework. There's no limit on the number of funds currently. Yeah, but we are doing reviews. I mean, I've mentioned that we are currently overhauling our regulatory framework or the apparatus, and so all these things are being considered, but currently I wouldn't say there is any limit. Thank you. For the next question, if you're a first-time fund manager, the requirement to submit financial statements. Okay, so I think we also did indicate that if it's a new company, you've now incorporated the company, and so you haven't operated. Yes, we require a statement of affairs. And I think we did indicate that it's provided in the checklist. So we require statements of affairs, and it must be certified. Okay. So the third question had to do with SEC should publish alternative courses that would qualify for a waiver in lieu of the GC certification. All right, so I'll take that as a suggestion. What we don't have any currently. What we do is that we look at what you have done and ascertain its relevance. It could be a very wide array of courses out there, available. But what we want is you are supposed to just provide some evidence or some proof of what you have done, or what the course you have undertaken, or the work you have done, and we appraise it based on that. Okay, but having said that, we are also working with the GC to come out with a model which will satisfy this space. And so it's something that is work in progress at the moment. I'm also aware that the VCTF is also working on something. And so we would collaborate, and then I believe that it will get better. Thank you.
Thank you. Percival, would you like
He
to
asked that
continue?
the question on MCR.
Ah.
He said something about capitalization, but he didn't complete it.
Yes. Hannah, may I?
Please go ahead. Please go ahead.
Okay. All right. So just taking back. Oops. Where's the feedback coming from?
Rosalind, can you mute, because your colleagues in your room also have their phone, so someone has to mute. Thank you. Thank you. Go ahead, Percival.
Okay. So for the capital, I think you mentioned something. Let me go directly to that and then come back to the issue that I raised and why it is important. The capital, you mentioned there's a 10 million Ghana city minimum capital requirement, which should be maintained throughout the life of the fund. And I'm not sure that throughout the life of the fund, the minimum capital for private equity would be maintained, because the private equity will be returning capital back to its shareholders. And so there might be an event where, if the fund manager is so successful and it is actually returning capital back to the shareholders, there's a point that he could fall below that 10 million threshold, and it could have a regulatory compliance problem for him. So I wanted you to explain a little bit on what this maintaining the 10 million throughout the life of the fund would hold. I think that would be interesting. The second thing is about this thing I asked about, the publication of the requirement. You see, and Rosalind, the thing is that we don't want a moving target from the regulator. We want to be very specific, because fund managers are looking to raise money from other sources. They are working very hard. Fundraising is not easy, and they also have to acquire licenses. In other jurisdictions, they've made it quite easy for them. And every time we get this thing in our face, that, oh, when I go here, it's much easier. Why is it so difficult in Ghana? We're trying to bring money into Ghana, and so on and so forth. So we want regulation to be, firm but also friendly. And so because of that, it is good that people know ahead of time, so that the game, the field is even and played well for transparency's sake. If you leave it as, okay, when you bring it, we would assess whether or not it fits, then it becomes a moving target. I'm not too sure whether when I send it, they will say no or they will say yes. I think that it would be nice to have some guidelines, some rules on what courses or what experiences would constitute as this one. When I have it, I can go and it will be easy for me, because the fund managers are also looking for skills, and looking for skills in this market now has become very difficult. And so if
your point is well made. Sorry to cut you, but I think the point is well made. Yeah. So let's move on to your next point. Thank you.
Okay. All right. Okay. Now, so my next point generally is this, that it appears to me, and this is a submission for consideration. It appears to me that for a private fund, the regulations shouldn't be as onerous as it is now, for the reason that most of the investors who are going to invest in a private fund are institutional investors. I know the guidelines specifies that it must be qualified investors that are allowed to invest in private funds. So ab initio, an investor going into a private fund is not a retail investor who is not informed. It's not an uninformed investor. It's an investor that is actually well informed and well equipped to assess a fund manager. So in coming up with the regulation and regulating the fund manager, if we place them in the same bracket as we will place a manager managing a collective investment scheme, or an investment advisor who is exposed to all kinds of people coming to him, and for that matter, that fiduciary responsibility should be emphasized, then we are going to make a little bit of a mistake there, because that means that the private fund manager is not being looked at as a professional who is attracting other institutional, well-informed investors. Now, the challenge here is this, that if well-informed investors are doing due diligence and are taking the fund manager through, and when I listened to you, it was fantastic, because the same thing that we do as institutional investors is what SEC is doing on the fund managers. But if we have to take them through as institutional investors, then it becomes laborious for the regulator to now impose these things, so that the fund manager cannot move unless this has been satisfied. But private investors are required to ensure that they have informed themselves well enough that this investment is good. That's why it's a qualified investor. So I think in that framework, we should be mindful of the amount of regulation we put in the space of particularly private equity funds, so that it doesn't become too laborious and it negates the work that a private institutional investor would do. Because the due diligence that we do is about the same as SEC is requiring of all these fund managers to do. Our act as venture capital requires the fund manager to have a SEC license anyway. But what SEC license is it? If we go to SEC and SEC has to impose the same things that we impose, and then the fund manager now takes a long time. The problem now is that if SEC has to issue the license, it will take a while for SEC to come back to us with that license. I know that you mentioned the timelines, and I'm sure there are fund managers here who would want to ask the questions about the timelines. It has been a major concern for us. The bandwidth at SEC, I'm not sure if it is still there. But we've had challenges with fund managers. It's taking quite a while to obtain the license. And when we have done the work, we expect that as qualified investors, we'll be given some room to hire the managers and let them do the work, so that it becomes a more flexible market that can compete very well with other jurisdictions. That is my general suggestions. I'm sure that the GVCA is engaging you more on that, so that the regulation doesn't become an impediment to growth in the industry. Right now, it's a little bit of a problem, even getting directors and putting them through the fit and proper test. The kind of things that we will
Hello,
ask.
Percival. Hello, Percival.
Yes, Rosalind.
Percival. Now you are doing a presentation.
No. I'm making a submission. Please let me land, and then you can take it
No,
up.
I think you. I mean, yeah, but I think you should just wrap up. Yes.
I think what
I
you
think you
said.
should wrap up. Yes.
Yeah, what you said was that you would take some comments and some suggestions from the industry. So this one is a comment. I think maybe SEC can take it on, and then when we engage better on the LPA Act, and then on the other aspect, we can delve deeper into the regulations and how we can maybe fashion something much more appropriate for the private equity and venture capital industry. So we don't place them as if they are managing collective investment schemes, or as if they are managing retail funds that require more stringent regulations in the market. I'll end there, Rosalind. I think let's leave it there for now.
Thank you, Percival. Thank you. So do we have 3? I don't know how many points he made. So
Okay, I'll give you time to respond to those, and then other people have raised their hands. Thank you, Percival.
no, so I think I'll respond to the MCR issue. Yes, so I just take your points. So maybe not the life of the fund, but I mean, I guess that for every fund there's a minimum holding period or so. And so of course, up until when you start paying out the capital. And so I agree with you on that. I think that the guidelines don't mention the life of the fund. I'll correct that, but that wasn't the intention. It's for the minimum period that until they start paying out capital. And I think it is fair that the fund should have a certain minimum size to be able to qualify within our space. And the 10 million is what is prescribed. Yes. The next one is that our regulations are too onerous, Percival. And he mentioned quite a number of single items, and that because it's for qualified investors only. we are asking for too much in short. And then the timelines for licensing, that's what he said. I think these have been communicated to the commission a number of times. What I'll say is that I'll take them as suggestions or inputs and would work on them, but we have been in a lot of talks with the association on that, on these same points. But I try to explain the licensing period. Currently, there's a moratorium on the FM licensing, and so you wouldn't get a fund manager application approved. Currently, as we speak, you see, even though the period is for 90 days, we are a public institution. And so if you know what our licensing process is like, it goes through and then it goes for board approval as a public institution. There are quite a number of issues in there. But as I spoke, I said that, you'd have to complete the fund manager licensing before you come in for the fund licensing as well. So a number of factors. Sometimes you lump it together as a licensing period of X months or X years because you are counting from at the time you submitted fund manager licensing application and then up to when you received the fund licensing approval. You see, you lump the two together, but you need to decouple it. And so I took my time to explain what the licensing process requires for each of those separate functions or licensed activities. But that said, your suggestions are very well noted, and I think that there are concerns that have been raised time and again, and the SEC will definitely work on them. Thank you.
All right. So we can, Percival, you can still remain there. We have a few other questions. Oh, sorry. Oh, okay, sorry. Sorry, I heard myself. We have a few other hands. We're going to take 3 more questions. I have Richard, Patrick, and Annie. So Richard, if you could unmute and start your question.
Okay, thank you very much. It's Richmond, by the way. Richmond. Wonderful presentation.
Apologies.
So my question, it's quite simple. I want to know if, let's say, I as an individual or even a corporate body, right? I have money and I want to invest in a company, let's say 3 million, and I want to buy equity stock or maybe debt financing to a company. And the goal is to improve their value over time and also gain some profit from there. Will I require licensing from SEC? And what is the way forward for such a person?
Thank you, Richmond. Can I get Patrick next to, you remain there, Richmond, okay? Patrick, could you ask your question?
Okay, thank you very much. Mine is not so much of a question. Thank you for the presentation.
Can Richmond repeat his question before you come in, Patrick?
Okay, apologies. Sorry,
Please.
Richmond.
Thank you.
Okay, so my question is, if I as an individual or a body, a corporate institution, I have some money and I want to invest equity stake in a company or give it as a debt finance to a company, and really the goal is to improve their value and also make sure that they are well structured and gain some profit, and eventually we also gain some equity or profit from their end. Will I require licensing from SEC? And what is the appropriate way to go about it in terms of SEC regulations? Is that clear?
Yes, thank you.
All right, thank you.
Patrick can go on, sorry.
Okay, thank you very much. I was saying that I'd wanted to know, or better still, I was suggesting that if we could make the presentation slides available after the meeting so that we can have them.
Yes, they'll be available and they'll be on the Ghana Venture Capital and Private Equity website. We'll share the link on the chat box just in case you don't know the website. So not a problem. So we had one more. Oh, has the person gone? I do have a few questions.
Did Patrick finish his question? Or you answered his question, Patrick?
He was asking about your presentation, if it would be available, and I said it would be on our website, the Ghana Venture Capital website. So, that was his question. So I have the last person is it Annie?
Yeah.
Am I pronouncing it right? Okay.
Yeah, you did right. My name is Annie Akwa. Thanks, Anna, and thanks, Rosalind. I think Richmond just took the wind out of my sails. So that's the exact question I have. Thank you.
Okay, Rosalind, I do have 2 questions in the chat. Shall I say them so you can include them in your? Can I read them out? Is that all right?
Yes, Hannah, you may go ahead.
Okay. It's in the chat box so anyone can see. The gentleman says, good morning. I wanted clarity on the auditors. Please, should the auditors of the fund manager or investment advisor be different from the auditor of the private fund? That came from William, and then it's on the chat so you can see it. And then the next question came from Senna, said, good morning. Can give more clarity the self-managed funds. I assume she's saying, can you please give more clarity on the self-managed fund? So those 2 are in the chat. And so we'll answer those 2, we'll also get a 3, and then Percival will come back to you after Rosalind gets a chance to answer these 3. That'll be the last set of 3 after Percival. All right, thank you.
So thank you, Hannah. So Anthony will take the questions on the Richmond's question, and then the other gent, Annie, who sort of had a similar question.
Okay, hi.
Okay, Anthony.
Okay, so so if I get Richmond's question rightly, he says that if he's an individual but is not operating as an entity, is not operating as a licensed entity, or perhaps a private fund, So he's just an individual who wants to invest, want to take an equity stake in a company. I think that can be done directly without having to acquire a license from SEC. However, once you want to operate within the space, you would need a license to operate within the SEC space. I don't know whether that answers the question. If it doesn't, he can still come again.
Anthony, unfortunately, it doesn't answer.
Are you there, Annie?
Hi, Anthony.
Yeah.
Yeah. So I was saying it doesn't quite answer the question because it doesn't remove it.
Then can you clarify your question?
Please, Anthony, if you can mute yourself at your end, I think that is a feedback.
Yeah.
Okay, so I'm company A. I made excess profit of 3 million in this particular year, and I have access to a few deal flows that I'm interested to make.
Richmond. Is it Annie or Richmond?
This is Annie.
Annie, you said you are company A, and
Yes.
you made profits of so and so. What business are you in? What's the nature of your business?
Agric. So I have an agricultural business, right? And then I made a profit of 3 million in this year. And then I have access to other farms or real estate companies that I want to make investments in, either in debt or in equity. So that is fast becoming like I dare say, a fund inside my company that I'm using to make these private investments in these companies. Is it a little clearer?
So, you make profits and you want to invest directly.
That's correct.
Directly in equity or private equity in some companies.
Or debt instruments in
or debt instruments in other companies.
other companies. That's correct.
So you see, if you are a private, if you are, so does it mean you are, it's your own funds, and so you might as well let a private fund manager manage those funds. You pass it through that, and that private fund manager may be licensed or may not be licensed. Currently, I'm saying that because not all private fund managers are licensed. Okay, but a licensed private fund manager you would have to just route your funds through that private fund manager to the investee company. But unless you want to do your direct investments, I don't think there's anything that stops you.
Thank you very much.
Okay. Rosalind, I wanted to quickly just add here. I mean, Annie and I think it was Patrick who also spoke. What you're saying is great. It's music to our ears as the Ghana Venture Capital and Private Equity Association. And because I can't talk much here, please put your number, or I'll put my number. Feel free to connect with me, and then we'll talk, because there's if you are in Ghana right now or in Accra today, then maybe we can discuss some opportunities, because what you're saying is very plausible. What Rosalind said is great. We as GVCA, we house the can I say, the private funds who are registered. We work closely with SEC, and we have an array of portfolios. So maybe the portfolio companies that you are looking at, we could look at them, or we can also introduce you to other portfolio companies that you could put your capital into. All right, but we can discuss that after this call, but I'm happy to hear that. But I'm going to pause now and let Rosalind, would you like to answer the other two questions that were on the text area?
Okay, so Naomi will talk about the auditor.
Yes, thank you. The question was, if I did understand, was the person needed clarification on whether the auditor of the fund manager or the investment advisor must be different from the auditor of the fund. And the answer is yes. We require that the auditor of the fund manager who manages the fund be different from the auditor of the fund. And the purpose is to forestall all forms of conflicts of interest, to have the same fund manager, the auditor engaged by the fund manager and engaged by the fund. We may foresee some form of conflicts, and to ensure that that is forestalled, the guidelines require that the auditor of the fund be distinct or separate from the auditor of the investment advisor or the fund manager, and both would have to be an SEC registered auditor. Thank you.
Thank you so much. And will someone respond to the other question about give more clarity?
Yeah. So the self-managed fund. Okay,
Yes.
he said he wanted more clarity. Okay, so the self-managed fund, basically it's where a fund doesn't engage a separate manager. It says that the private fund shall have a separate manager. And so that's when we went on the route of you must have a fund manager who is licensed by the commission. And the fund engages that private fund manager, to manage the fund. Okay. However, it says that except where the commission authorizes a self-managed private fund. And so there are some circumstances where the fund doesn't have a separate fund manager, but manages the fund within. And in that case, what the commission does, or what is required is that is the directors and the officers of that fund that are licensed, and they fulfill the obligations of the fund manager, the requirements of the fund manager, in terms of assessment, in terms of reporting, in terms of whatever the requirements of the fund manager may be. It is the fund that's fund through the directors and the officers of the fund. They perform those responsibilities. But you see, I did mention that for some of our LPs, they require that you must have a fund manager. So you look at VCTF, they require an IA or a fund manager separate. When you go to NPRA, they require that you must engage a SEC licensed fund manager or investment advisor as part of their requirements. Yeah, we also look out for other things because you see that arrangement must be authorized before you can go on. So it's the SEC that has to give you that waiver or that dispensation. And there are certain factors that we look at. Yes. Thank you.
Great. Thank you so much. You guys are doing very well. And thank you so much for the questions, everyone. We have three more people. We have Percival, we have Liza. Can I say Liz or Liza? And then we have Nora. Percival, would you like to unmute? And then, okay, Laurencia. Let's push three. Percival, would you like to unmute?
Yeah, hello, Hannah, thank you. Rosalie, my final question is just a clarification. I think I had two, but the second one will be asked by Nora, so I'll leave that for her to ask. So for the licensing, you said that the fund management license is now on hold. The investment advisor license is now that which is being issued. So in that case, for an advisor advising a fund manager looking to manage private funds, SEC would typically accept an investment advisor license and not require if there's any fund manager license in place or not. The reason I'm asking is, when I read the guidelines for private funds, you notice that they are in two places where they are requiring that the manager must be a manager that is licensed to manage collective investment schemes. And that's Rule 4. It talks about having a manager that is licensed with a license granted for the specified purpose, which is that a license that's granted for managing a private fund. But I don't know if SEC has specific license for these. So I'm imagining it to be the two category of licenses. And then when you go to 19, it talks about a manager which must be licensed to manage a collective investment scheme. Now, if by that they mean that it's a fund management license, then I think maybe SEC must clarify that that is no longer a requirement and that an investment advisor license is enough so that everybody will go for that. And then while we wait for the ban to be lifted on the licensing for fund managers. Thank you.
Thank you for that, Percival. Should we quickly go to Liz? And then Nora?
This is Liza. Yeah, sure. My question is related to the separate auditors because I really don't understand the rationale behind that. And that kind of speaks to Percival's point earlier about it being prohibitively difficult in Ghana to get the license because that's not a requirement in any of the other jurisdictions I've looked at. Is that something that SEC can look at because it just makes it more difficult, and other SECs don't have that requirement for separate licenses. for the separate auditors for the investment advisor or fund manager versus the fund itself?
Lisa, it's not clear. It's not audible enough.
It's true. Liza, can you please repeat? I don't know if you're wearing an earpiece. Probably just speak directly
Yes.
from the
Is this
phone.
better?
Yeah, that's much better. Thank you.
Okay. My point was related to the separate auditors and kind of echoing Percival's earlier points about it being prohibitively difficult in Ghana, some of the requirements versus other sects and other jurisdictions. From my research, that's not a requirement in other jurisdictions, and just kind of bringing it up to the sect's attention, that's something that can be considered. Because in other jurisdictions, it's the same. It can be the same auditor for both the advisor or fund manager, and for the fund itself.
Okay, thank you. Nora, and then Laurentia.
All right. Thank you, Roslyn. Thank you, Kwejo. So the question is, there are two questions. The first one is, I realized from this presentation that the licensing procedures for being like private equity, venture capital is not very different from the licensing procedures of the um, currently running fund managers, the fund managers that SEC is currently regulating. So I just wanted Roslyn to confirm that the licensing procedures are the same. And I realized the minimum capital requirement is also the same. And then the second question is, Roslyn mentioned that there's a moratorium for issuing of licenses. She mentioned it was for the fund managers. I just wanted to confirm that if a PE firm wants to, or a VC firm wants to request for license or apply for license, does the moratorium apply to them? If it does, is there any timeline on when it will be lifted? And does the company have to halt or cease or not begin operations until they have a license? So those are the two questions.
Thank you so much. Roslyn, should we take one more, or you want to answer these ones?
Okay, so let me begin with the licensing process is not different, and then the moratorium. Naomi will take these two.
Okay, thank you. Okay, so as Mrs. Daka explained through the presentation, the licensing regime for a fund manager is different from the regime for the fund. However, there are some processes that may repeat. For instance, fit and proper assessment. The fund manager would have directors. The fund manager would have shareholders or principal officers, and those would be taken through the fit and proper assessment process. If the fund has directors, the directors would also go through the fit and proper assessment. They would therefore both submit KYCs. Our EDPN, the director's personal notes, both would submit. If you're a director of the fund or a director of the manager, you would all complete the form and would be taken through the fit and proper process. However, there are things we would require from the fund manager, we wouldn't require from the fund. For instance, the fund manager would be expected to submit business plan. We do not ask that of the fund. We would rather ask for the PPM. And so the representatives would be required of the fund manager, sorry, but we do not require the fund to provide us compliance officers and representatives. And so these are quite different processes. Whichever way, the board would have to approve or grant the license. And so when we are done, we'll present our recommendations to the approvals committee. Yes, so they are quite distinct, and yet there are similarities. If Nora could repeat her question, the one on moratorium, I'll be grateful. Thank you.
Okay, thank you so much. I don't know, Lisa, right? Okay, I don't know who just answered, but the question on the moratorium was when will it be lifted, and then do the companies have to wait until it's lifted? And then I think that the question you answered just now was the difference between the fund manager and the fund license application process. And I get that. I'm asking the difference between the fund manager and a private equity firm or a venture capital firm. And then the moratorium question, I think. Please, did you get the moratorium question?
Okay, yes, thank you, Nora, for the clarification. So I'll start with the moratorium. So yes, currently there's a moratorium on fund management license, and so we do not license any entity to take on the broad function of a fund manager. Before the moratorium was granted, there were a number of things from 2019. We all know the condition of the industry or the sector. And so there are a number of things that the Commission is considering or putting in place. And in due course, the moratorium will be lifted. However, for private fund sector, the Commission realizes that the investment advisor license could step in and do the management process, because a fund manager's license is, in quotes, broader than the PV space. And so we allow investment advisory license to be used to manage the private equity, venture capital, or hedge fund industrial sector. Yes, and so if you are given the investment advisor's license, the Commission is not expecting that you use that license to engage in other fund management activities except for the private fund space. I'm not sure if I've answered your question, but that is what it is.
So just to add, hello, just to add a bit, this is Roslyn. So it's Naomi rightly said, it was one of the measures that were taken after the crisis, and one of the measures to clean up the space we needed to halt. Okay, what it is that currently within our regulatory framework, there's only one category of fund manager license. That's where our issue is. There's just one category of FM license. And I guess that's what Nora is sort of trying to bring up. And so just to ensure that the private equity space is not stalled and the growth and the development is, progresses, it was thought that this IA license could be used. And indeed, the argument was made for it, in that the typical private fund, the funds will not be channeled through the manager. It would go directly to the investee company. Okay, the commitments are made and the funds are disbursed to the investee company. So they don't hold the funds like the normal or ordinary fund manager would. And so the justification or the argument was made for the use of the IA license. And so this is dovetailing into Percival's points, his submission. So Percival is supposed to answer your questions that we should clarify. This is the explanation to it. And so it's different from the guidelines make reference to manager of the fund or a fund manager. However, this is what we are using at the moment. And it's just so that this sector or this space can still be active or progress. Okay, so it's different from that delegated function you referred to, where an advisor is advising a fund manager and that the fund manager takes that responsibility, which is in the guidelines. But in this case, the manager being referred to in the guidelines applies to the investment advisor, or the investment advisor function is akin to the manager function within the guidelines. I don't know whether that has answered your question. You said we should clarify why we wait for the ban.
Rosalind, I understood it until the last part where you're talking about the investment advisor and the fund manager and how they sit. If you can repeat that one, I'll be grateful.
First of all, I didn't hear you.
Oh, I said I understood it up to the point where you started talking about the investment advisor and I think the fund manager. I understood what you said about SEC has taken a decision to allow for the purpose of private development, use the investment advisor license rather than fund manager license. I understood that. But within the context of the guidelines, I think you were trying to explain why it is the way it is, and that it is supposed to be an investment advisor and not a fund manager. I think something like that. I didn't get that one. That's why I was asking you to repeat.
So I think I said something like an argument was made, I mean, for the use of the investment advisory license, that in reality, the funds don't sit with the fund manager, and that it goes directly to the investee companies. The fund sitting with the fund manager having to open a trust account, etc., is the normal or the regular fund management activity. With this particular space, PVC, the funds move directly to the investee companies, and so the fund manager doesn't have direct control of the funds. And that was one of the reasons or the arguments made for the use of the investment advisory license, because they advise, etc., and the funds are disbursed for the activity, investment activity. I don't know whether that's what you missed.
Yeah, that's clear. I think I understand it now. It's quite clear. Thank you very much. Thank you very much. Appreciate it.
Rosalind, I wasn't sure if we can take the last set, or have we finished the previous set of 3? Can we take the last set? We have Laurencia. Is that okay? Okay, so I'm going to ask Laurencia.
That will be the last, Anna.
This is the last, yes. And we really thank you so much. Laurencia, please unmute and ask your question. Laurencia?
Good morning.
There you are. Okay.
I want to find out when the commission will start issuing rep license for the private fund managers. Thank you.
Okay, thank you very much. Is there any more hands? Last opportunity. Percival, would you have any burning question? Okay. Okay, if there's no question, Rosalind, could we also maybe can share, can you also share in general, some of the bottlenecks? We have people on here, of course, we are, in the private funds business, and we also have people on here who, like we heard from Richmond and Annie, want to also invest in the space. So can you also tell us not just the challenges, but in the past, don't need to give us the names of the companies, but some of the bottlenecks that happened to, or the sanctions that SEC gives to funds who are found doing things that are not, I guess, credit worthy? And then also, is there a role of rehabilitation? So even if someone was caught in fraud or something, is there a rehabilitation process to then bring them back into the fold so that they can reapply for a license? Or is it like a, win all, lose all? So once they're caught, their license is revoked and they can no more be in the sector. So what does it look like for us as private funds? The challenges, the sanctions, whatnot. And what is your experience as SEC in the past? What has happened? Anything we can draw on from those experiences? Thank you. And I think that's it. So those two questions from Laurentia and from myself. If Percival wants to add one more, otherwise this is the last set. I think that's it. Thank you, Roslyn.
Okay, so I will take that. So if I got your question, what are some of the sanctions we mete out to the operators in the space? Should we find some infractions? So we treat them as still under the fund management space. And so broadly, we would discuss a few of the sanctions we mete out to our operators. So our operators, our sanctions are broad. So they range from penalties, which are financial. And so we would charge penalties and require that you make payments. If you don't, then we would escalate them. We look at suspensions depending on the gravity of the issue, and it even goes to revocation should we think that we need to withdraw the license completely. There are other cases that we may even resort to the courts for some redress. And so there are broad sanctions depending on the peculiarity of the offense. Thank you.
Okay, we can also do warnings, written warnings or written reprimands. Yeah.
Okay. And are there any case studies?
Well,
are there any case studies of such things, good and bad, that we can draw from, especially as Gvca?
So you see, the license category is one category is FM. Going forward, and that's one of the things that the new bill is seeking to make provisions for or to change, is there should be, or there are going to be different license categories under the FM license. So maybe an FM license specifically to deal in pension funds, to deal in, let's say, private PVC space. Okay, so that's how, that's up until now, it's been one license category. Okay, so the case studies that you will find, there are lots that has to do with the regular FMs in terms of how we've dealt with them on sanctions and various enforcement actions against them. It doesn't just start with revocation, or it doesn't just start with the suspension. I mean, it's graduated and it's escalated. I mean, and so eventually when you think that you have to be taken out.
Thank you so much. And I know you still have Laurentia's question to respond to, but
yes, Laurentia was, when are we going to start issuing rep license for private fund managers? Hello?
Yes.
Yes. Is that the question?
Yes, that is it.
Laurentia, I think you need to come a bit clearer. Because for a fund man is the fund manager license or IA license category, and for each such market operator, you must have reps. You must have 4 reps, and rep licenses are issued to these reps. And so I don't know what exactly you are referring to.
So this is the venture capital fund manager.
So what license that? So that's for the fund itself. So that's a self-managed fund.
Yes, it's a self-managed fund.
I did indicate that at the time of licensing, the directors are licensed. We ask for 4.
Yes.
Directors and representatives or officers of the fund, yes.
We will make sure you get the presentation. She did explicitly explain it, so I'm not sure she came in the beginning, but we'll make sure she gets the presentation. Thank you, Rosalind. And
Sorry, Hannah. I think it's
Okay.
very important. I think it's very important. It's not about a presentation, but the issue is for private fund managers, that process is done. But unlike the typical fund managers where the reps get individual certificates, we get LPs requesting for that certificate because the process says it will be given. But individual certificates are not issued. And so that is where the question is coming from. Would individual certificates be issued to those individual representatives that have been approved? Thank you.
And Percival, just quickly, we were talking behind the scenes.
Hannah, I was just asking Rosalind. Rosalind, please, one question, final. When is the SEC board going to be reconstituted? We need to know because we also have investment programs to bring new fund managers on board. And without the SEC board, we can't license new fund managers and the process goes on and on. So can you give us an indication of when the SEC board will be reconstituted? And in the meantime, is SEC putting in any measures or anything in place to ensure that at least those new fund managers would at least get looked so that when the board is reconstituted, they can get their approvals and get running with their funds? Thank you.
Percival, I think you should deal with the commission. So submit whatever applications or that you have to the commission. The commission would respond, yes. Okay. Your whatever engagements you have with the commission. So let's see what it is and then you can advise. Okay. Thank you.
No, but
is it
I was asking when the board will be reconstituted, not the application.
Percival, I don't think I have an answer for you at this point.
All right.
Thank you.
And Ebenezer's contribution, I wasn't sure if you want to share anything about the license.
So is that a self-managed fund?
Yes, Rosalind. But our understanding is that yes, and the understanding we have received is that individual rep licenses have not been issued to the private fund representatives. So that's what we need clarification on. And when with that, by being licensed, it is assumed that that has been issued, or we should expect individual rep licenses for the individuals that were nominated and approved. Thank you.
Yes. So Ebenezer, let's take your situation offline. Okay, we would work on it. You should be licensed, and so let's take it offline and then work on it.
Thank you very much. Thank you.
Great. This has been an awesome session. Sylvester, I did promise Rosalind that this is the last set, so I do apologize. But we can see that we do have a lot of questions, and Rosalind and the SEC team, I want to say thank you so much for being so humble and staying with us for 2 hours to enable us to complete this session. I just want to say to all the people who joined, again, thank you for joining and for staying on. Rosalind, I'm going to leave the last set of thank yous or any wrap-up words you want to say to us. Please, I'm leaving the last words for you. Thank you again, SEC, and thank you for the GVCA and friends. Thank you. Rosalind, I'll leave the last words for you to wrap us up.
Hannah, Jocelyn, please, when we're done, could you kindly stay on the call, Rosalind? Thank you.
Thank you. All right, so thank you very much for this session. I think it has been quite engaging. You can always call on us. SEC is always ready and willing to engage with the market. We are developing the market, we are growing it, and so your concerns or the issues you raise. We really cherish them, and trust me, we will also do what it takes to get them incorporated into our regulatory reviews, and then ensure that the market is a better place. So for all those who have issues or concerns or that were not addressed, please, you can reach out to us. We can still work on them. And so I'd like to thank you all on behalf of the Director General, the Executive Management Team, and the entire staff of the Securities and Exchange Commission for having us, and we are available. Thank you. Thank you, Hannah, and your team. Thank you.
Thank you. Thank you. All the best. And have a blessed rest of the week and weekend. Take care. Bye.